Good morning, everybody. It is February 11th, 2022, and a whole bunch to cover today. So I'm not going to babble too much. I babbled before we started recording, so you don't get the story of how my attic started to snow. All right, crypto trade shots. If you're a member of Fundamental Trends, I want you all to have it. And temporarily, I'm going to take the restriction off on signing up. I'm just going to let outside folks sign up for it too. So anybody can sign up for it for $199. Just click on here, and you're really the only ones that know about it. So I'm not advertising this. So you're either a member or watching my YouTube videos to know what's going on. Got a bunch of free samples so you can understand what those are. You do have to have a free library card or a special reports library card to see them, but that's free if you like it. You can sign up for only $199 a year, and these reports are pretty spectacular. Shooter does them. Obviously, you've heard me talking about NFTs and crypto for 2 years now, 3 years now. And I first bought Bitcoin when it was under $1,000. So I've been aware of crypto since before 2016, really started studying in 2016. Had skepticism. I'm a regulated guy. I got to be careful. So never really got into it too much. But then I recommended it in summer of 2020. Bitcoin and Ethereum. And I think that the combination of my research, that my side hustle, apparently having a side hustle is cool, according to Elon Musk, is I want to start a real estate development company. I'm just in batting practice on it, but the real estate development company will be funded with NFTs, and that is how you will have membership to a condo, hotel, or golf course. Somebody just did a golf course, things like that. So Shooter covers the trading. I cover, and he covers a lot of the shorter term and intermediate term stuff. I mean, he's talking about internal revenue, service staking, and things like that. This is one of the things I talked about with Sean Stein-Smith, is how the Internal Revenue Service is going to work with crypto, how the regulations are going to develop over the next couple of years. And between now and then, there's going to be a lot of trade opportunities. I think one of the things that'll happen is when the regulations start coming out, they're not going to be what the crypto community likes, right? Because they want free everything, Wild West, don't tread on me sort of stuff. Well, we've seen what that does to a financial system. It ends up causing really big crisis. So we have to regulate it in a way where at least we know where the crypto is. I think that that's a baseline thing that the government's most concerned about. They did just track down, what was it, $3.6 billion in stolen Bitcoin. A couple in New York had stolen it 5-6 years ago, and now it was, or maybe 3 years ago, whatever it was, and now it's super valuable. It went up tenfold. Interestingly, they were able to track it through the wallet's purses. Why? Because cryptocurrency is ultimately trackable so long as it doesn't go completely dark. And if it goes completely dark, well, it's not going to get turned into cash then. So they have to convert it to cash in order to make the theft worthwhile, but then they become visible. So if the FBI is looking for you, they're going to find you. And they got a pretty big division on this now, and so does the IRS. So we're watching all that. When the regulations come in, when the digital dollar appears, there'll probably be a pretty big buying opportunity in certain stocks and the surviving cryptocurrencies. Because as you know, I've said 99% of the cryptocurrencies are going to go to zero. But there is a backbone, Ethereum, and everything attached to Ethereum that has utility. There's going to be some pretty amazing things that come from that. There'll be a lot of money that can be made, not only on the cryptocurrencies, but some of the companies that are early adopters that understand what's changing in the global financial network. And this is just not what you buy your pizza with. Every contract in the world is going to be impacted by this. Logistics is already impacted. Energy is already impacted. Energy trading between firms and nation states. Digital contracts are going to explode. It's going to be the biggest thing to hit commerce ever. I want to emphasize that. The biggest thing to hit commerce ever. And Ethereum is the backbone of that. And there's going to be offshoots and forks and all sorts of other things that work here. So there will be several other coins, I believe, that survive and thrive. but Ethereum is the backbone. That's why I dollar cost average into it every single month. Now, between now and maturity, which is probably a decade away, for sure 4, 5, 6 years away, there's some great trades. And Shooter has been getting us into some great trades. And you don't trade daily with this stuff, but there's some swing trades and some more cyclical intermediate trades, 3-month, 6-month trades that make a lot of sense. And the Elliott wave theory actually has been phenomenal at tracking this stuff because there is no fundamentals mucking it up. It's just a technically driven security. Well, it'll be named a security eventually. And hey, Shooter's already made me money, so you should let him make you money. Anyway, he covers a lot of the things that are in the news and going on right now. And I'm covering some of the bigger pictures. You've seen what I've gotten from FS Insight. Well, I've reverse engineered what they're doing, so I just go to the horse's mouth now. I don't need them between me and the information. But all these trades are pretty interesting trades because they're not all cryptocurrencies. Some of them are stocks. So he's covering just a world of things. And if you want to be in cryptocurrency, I tell you what, I don't think you're going to find a better service. We've worked on this all year. Actually, all last year, I was working on this, and then Shooter came on board, and he really just took it and ran. So this is technically his service. He gets 75% of the money. 25% of it goes to upkeep on the website, so we can just keep upgrading it. I don't take a dime, but I'm super interested, so I'm super involved. You're going to want to sign up for this. Again, I will take the restriction off of being a full member here. So as long as you have a free library card or the special reports library, just sign up for this, and then you'll have access to crypto. All right, got the commercial out of the way. A lot of content up. Stocks of the week I've been updating. I changed the bottom fishing prices on some of these. Square just about sniffed theirs. PayPal just about sniffed theirs. Coinbase, I haven't looked at it today, but I adjusted some of these bottom fishing prices down. And I want you to understand something. That doesn't mean you can't buy them now and sell some puts on them now. It depends on your trading style. So if you are going to trade with a little bit more frequency, I don't mean swing trade week to week, but if you're going to trade over the quarter or the half year, then a lot of these are worth buying at places in the buy zone that aren't the bottom. Now, if you're a pure position trader, if you're not going to do any short cycle trades, and again, kind of between swing trading, which is measured in weeks usually, and maybe a month or two, and position trading, which is generally longer than a year. Those in-between trades, those 3 months, 6 months trades, you can still buy these and play the waves in the cycle, the big waves, the ones that last a short cycle being 3 to 6 months in most cases. You can still get into these. That's what Shooter is real good at. So, if we take a look at these as we're about to, you'll realize that there's a lot of money to be made, and not the day-to-day moves, but more the month-to-month moves and the quarter-to-quarter moves. Here's the dividend stocks, right? I'm probably going to black that out when this goes public. All right, so I just showed you the list of stocks, and so it is removed now for the general public, but you have the article. I changed my limit orders, as I mentioned, and I spent particular attention on the ARK stocks. I'm concerned that the short interest in ARK is going to manifest again in a month or two when the Fed really gets going on the rate hikes and QE is over with. Now, there's a possibility that when you hear this, QE is ended. There's a possibility that they announce today at 3 o'clock that they're done with QE. That would be a couple of weeks ahead of schedule. There's a lot of people who worry that that'll spook the market and that we'd have a big sell-off on Monday. Maybe. We'll see. I don't think they're actually going to end QE today. Yes, I think at this point, with a couple weeks to go, they're just going to keep it on schedule. And I don't think you want to see the Fed scare everybody. And I think Jerome Powell is completely aware of that. One thing I will say is that this inflation is not being caused by the Fed. And all the inflationistas out there who are pounding their chest and pounding their tables and jumping up and down and kind of doing that thing from the Wolf of Wall Street, they're full of shit. All right, the Fed didn't cause this inflation. Stimulus didn't even cause this inflation. What is causing this inflation, and we know this because we have the measurements, is that OPEC is manipulating the price of oil higher. That is 50% of all inflation. All right. So if that's 50% and the rate is 7.5% right now, that means that X higher oil, right? If oil was still in the 50s or 60s a barrel, X higher oil, inflation would only be about 3.5 or 4%. Okay, that's still not great, but it's not much above what they were trying to do. The next biggest component of inflation is the supply chains shifting and having a bunch of ships on the ocean, which is technically logistics. But if you put those two things together, that's another third of inflation. And almost the rest of inflation is two other things: higher rents and mortgage costs and food. So where you have inflation somewhere in the range of 1/10 of it being the food, that's bad, right? If everybody's food bill went from, or grocery bill went from $100 a week to 130, yeah, that sucks for people where $30 matters. That's over half of America, actually. So if all of a sudden your monthly food bill is up 120 bucks, right? That's $1,400 a year, $1,500 a year. For folks making 30, 40, 50 grand, that's a big freaking deal. You're making six figures, you don't notice it so much. But what you do notice is that your rent went up if you're renting. And you notice that when you try to go out and buy a car, prices are really firm. So if you have a car breakdown, you're a month-to-month person, you're in trouble. And again, that's over half the population. So you have 60 to 80% of the population being pretty negatively impacted by inflation because they feel it in their ongoing expenses and they don't have much invested that benefits from the inflation. The problem with blaming the Fed is that it puts the Fed in a position where they might want to react more harshly than they should. Remember, my original prediction was that the Fed wouldn't raise rates. I'm going to be wrong on that. I mean, I've pivoted on that. But remember, I said the Fed was going to reload their bazooka way back here. Fed is reloading. So way back in December, I told you, call it foreshadowing, forecasting, really good guessing. At this point is where I said, oh, okay, it looks like the Fed really just wants to reload its bazooka so that it can fight the next problem. And what do we know as people who understand that deflation is the real boogeyman? We understand that there's more stimulus, more bailouts coming, particularly to do with the baby boomer bust that's coming later this decade. Luckily in America, we have the millennials to offset that. But Japan and China and Europe don't. That's why they seem like they're flying by the seat of their pants sometimes, because they are. Japan, they tried to let some immigrants in and the population went nuts. China's just desperately telling people to have more babies. Well, that won't help for a long time and cause a bigger problem in 30 years, 40 years. In Europe, they're trying immigration and they're getting blowback on that. It's part of the whole rise of the right, the extreme right, because it's always the foreigner's fault. It's never just the way things are. It's somebody else's fault. We got to blame somebody. They don't look like us. They're not from where we came from. It's their fault. So the Fed knows that some of these crises are going to come back because slow growth forever is a real thing. And there is structural challenges to the global economy in the developed world specifically. The emerging markets aren't much healthier. There are certain countries that are, but demographics are destiny, and we still haven't accepted that as a race or a civilization, and that's bad in general. I'll tell you what, if you understand it, it makes for a hell of an investment opportunity. So as the Fed reloads its bazooka, and I was talking to the CFO of a bank here yesterday, she actually called me and asked, how many Fed rate increases do I think we'll see? They're starting to forecast 7 all of a sudden. And I said, I think we'll get 4 or 5 this year and none next year. Why would I say that? Why would I be so out of step with the popular narrative from the inflationistas? It's because on this one time, the inflationistas are wrong. When I say one time, I mean in a string of dozens and dozens of other times. This inflation is transitory, but it's a longer transitory. And it's not going to be a couple months, it's going to be a couple of years. But that couple of years is already halfway through. The comparisons are going to get much, much tougher by the second half of this year. So unless oil spikes for a hot minute, and if it does, it's just going to drive alternative energy, inflation rates are going to start coming down significantly by the second half of the year. One of the companies that I'm going to show you here in just a second is going to be a major, major beneficiary of one of the things that reduces inflation, and that is supply chains moving back to America, which is already happening. This is not a speculative thing. This is not, oh, Kirk is just saying this. No, if we were drinking beer together, I tell you, pull your head out of your ass if you're not listening to me right now. Inflation's going to come down. Supply chains are going to keep moving to America. There's going to be massive winners from that. Several of our companies are involved in that. And when you pick out your companies, you need to stack up your catalysts and you need to understand the secular trends to start. The secular trend here is that supply chains are going to move back closer to home, wherever the resources are, wherever the consumers are, and in line with geopolitical concerns. China is going to lose a lot of their export power over the next several years. That's one of the reasons why Xi has got his wolf warriors out. He knows this. Again, not speculative. It's happening already. It was happening way back under Presidents Bush and Obama. Trump trumpeted it. It's happening now under Biden. The whole energy shift really kicked into gear after 9/11. Why? George W. Bush got really pissed off. He said, okay, uncork the wells, start fracking. So all these things play together. And it goes back to what Tom Lee is saying, and more importantly, what I'm saying, and what Warren Buffett is saying. And he's been saying it way longer. So let's put this on Buffett. I'm not in their category. I'm not worth billions. I don't think Tom Lee is either. Maybe he is. Who knows? But he's rich enough. I'm just some 7-figure guy. The United States has the best economy in the world. It's not even close among big countries. There are a couple little places that are pretty good too. When you think of the United States, understand this. We have labor that's good to great. We have technology that's good to great, leading edge in most cases. Don't forget the highway system, the rail system, our airport system. These are all big deals, but we take them for granted. As alternative energy comes online, we're going from having enough energy to having more than enough energy. Cryptocurrencies and the whole revolution in finance has suddenly shifted to the United States from China. I'll tell you, China was stupid to get rid of Bitcoin because exactly what the DeFi people were saying happened. All the development moved. And with it, all those jobs and all that wealth creation and all that control of the change that's coming to the global financial system. All the Chinese saw was that money was getting laundered out of China, which is probably why Bitcoin was created, to launder money out of China. It's the same reason they opened casinos in Macau. Huge money laundering operations. Again, not speculation. It's all over the place if you want to look it up. So as all these changes occur, the United States, because we have the millennials who are going to offset the demographic declines of the boomers, we're about to go on a massive, massive bull market. And more importantly, higher standards of living if we're not dumbasses about taxing. And I don't even mean higher taxes. I just mean closing the loopholes, which is what the corporate minimum tax is all about. Keep all your loopholes, but you're still paying 15%. Great idea. And they leveled out taxation around the world. They somehow got 100 countries to jump on board with that. Hey, how about you bring yourself on par with the United States tax scheme so that you don't have an advantage on us in price? How did they convince them of that? Do you think that was them convincing us? No, it was the other way around. Read Confessions of an Economic Hitman. I promise you, you read that book, it'll change the way you think about the world, even if you don't believe all the stories in the book. We are so far ahead of everybody else that when you take a look at the Fed and you hear all these people calling the Fed the boogeyman, maybe you should stop and think for a second. Maybe the Fed's got this one right. Maybe they know that they've got enough firepower in the system right now to get through the lumpy spots. They can raise the interest rate a point, 2 points. I'm thinking it'll be 1.25 or 1.5 on the Fed funds rate by the end of the year, and then it won't go much higher. Why? Won't need to be. At 1.25 to 1.5% on the Fed funds rate, the yield curve doesn't go inverted because you'll still have 2-ish% on the 10-year, maybe 3-ish%, and especially 3-ish% as the economy continues to develop over the next several years with supply chains moving to the US. And companies like Intel closing these particular alligator jaws. Intel always kept up with the QQQ. Top line is QQQ, bottom line is Intel. On these charts, it's the blue line that's always the main one that we're looking at. And why did those alligator jaws open up? People want to say, well, they made bad acquisitions. No, they didn't. They weren't great acquisitions in every case, but they're getting value out of all of them. And more importantly, look forward through the windshield, not in the rearview mirror. What is Intel about to do? With 7 new fabs, I believe, is something that's a crazy number in Arizona and Ohio. They're going to start doing all the things that Taiwan Semiconductor was doing, but in the United States with government money. Remember, the government really does pick out winners and losers, but Intel stepped into a void that needed to be filled, much like Elon Musk did. Elon Musk changed the world. Intel is about to change the American economy along with a few other companies, Ford being one of them. Intel is probably going to grow 3 to 5-fold over the rest of this decade by fabricating semiconductors for other semiconductor companies. They don't have to maintain as much of server space as they had in the past. It's okay that AMD is going to be in there. And AMD is probably a company we should be looking at too. There's something on top of. There's something that the market is missing about AMD as well. People are living in the past right here. They're saying, oh, I didn't do anything. Okay. You can feel that way all you want, but feeling is a horrible way of investing. This stock gets into the 30s, middle 30s. I'll make it my biggest holding in front of Ford and AT&T and everything else, because this gap is going to close. This is going to come down a little bit and then take back off, and this is going to lead it. Intel might be your next trillion-dollar company. Be tough. I mean, that's like an 8-bagger, but it might make that run, right? We've taken a look at Taiwan Semiconductor and what they did. Haven't redone this chart in a while. There's a gap right there. It's probably as low as it can go. No selling pressure at that point. Probably have buyers right about there. If you take a look on how the volume chart is working on this side, Taiwan Semiconductor gets under 100. You're probably going to buy it. So it pays a little dividend. But Intel's the one. Compare Intel. Quite the alligator jaws when Intel's going to be taking Taiwan Semiconductor's business with more fabrication power and no Chinese government threat. And by the way, federal government sending them a few $billion, billion with a B, to get started. And they were smart enough. Remember me saying it for months? I wonder why they're building in Arizona. Why don't they build near where the water is in the Midwest? And suddenly there's a deal in Ohio. This gap's going to close too. If you're a dividend investor and you're not figuring out a way to get an into Intel, why are you managing your own money? Intel is screaming at you. Fortress balance sheet, already a good dividend. Buying back shares, fixing the supply chain issue that's the #1 supply chain issue in the world, which is a jam up in semiconductors. That increased car prices. We know that the cloud is going to increase 5-fold this decade. That data's got to be somewhere. It's all using semiconductors. If you were going to own one thing, just one stock, it wouldn't be Intel, but it would probably be in the top 10. If you own one stock, I think you own Google. But then Microsoft and Apple and Amazon, right? Those are the 4 horsemen. For a while, Intel's going to close that gap, though, for the next 3, 4, 5, 6, 7 years. Who knows what happens after that? That's a long time away. But these guys have the scale to almost single-handedly fix the semiconductor problem in America. And they're largely going to do it. They're going to make a lot of money. Go back a step here. Somebody asked, well, how can the Fed manage supply chain based inflation disruptions? That's the point. They can't. Mohammed El-Arian was on talking about it today, and so was the guy from, I think it was Morgan Stanley. I don't know. Morgan Stanley, Goldman Sachs, BlackRock. It was one of them on Bloomberg this morning, saying, look, it doesn't really matter what the Fed does. I mean, they shouldn't be putting money into the economy right now because it's a pretty good economy. I mean, seriously, in the summer of 2020, did anybody think we'd be at full employment again? Did anybody think we'd be at full employment this fast? I did, and I told you so. Go back and listen to those webinars. I told you what was going to happen. Just like I told you, this year is going to look a lot like 2018. 2018, we had an early year correction. We got a little bit of rally, then things broke down after Labor Day. I believe that is still the way things are going to look because the Fed is going to raise interest rates into the autumn. After that, we'll see. Now, if the repo market gets shaken up again, remember, Fed has $1 trillion laying around. They have a fund to make sure the repo market stays okay. And just having the fund tends to stabilize the repo market. But if they have to use it, they will. And what if, after interest rates are a point higher, they use some of that repo market money, they get it into the market? Sounds an awful like something that I said on Market Watch and to you guys. Do QE while interest rates are higher. Best of both worlds. Stronger currency, still highly liquid, but you get rid of negative interest rates. At least bring negative real interest rates back up to zero. Because negative real interest rates, that means that you're fighting off depressionary trends. And depressionary trends are either born of financial crisis, just blatant stupidity, or demographic. Even in 1920s, it was largely demographic driven. The boom after World War II, demographically driven. The malaise in the late 60s, early 70s, actually throughout the 70s, into the stagflation, which was oil created, was demographically driven because we had gotten by the peak earning and spending years with people who had come back from World War II. But then the baby boomers hit in the 1980s and 90s. They drove it up. And we've been fighting their decline since, but then now we have the millennials coming, and that's a big generation. I've said this before, I'll say it again. The United States is going to see much higher standards of living in the future because we have everything. We're the linchpin of the global financial network. All the cryptos moving here. The stable coins are going to have US treasuries in them, and this inflation too shall pass. And you want to be in the companies that benefit from the inflation passing and all the things that make the inflation pass. So if oil is 50% of the increase in inflation from inflation, what benefits from that? Alternative energy and EVs. And if supply chains are another big hunk, another third of it, and most of that is semiconductors, there you go. And the ships will eventually get to shore. And we have no shortage of food. We're just dumb about how we distribute it. But, and this is something I've been talking about for 20 years, if food does become a problem, we already have the technology to grow everything indoors. Aquaponics, vertical farming, all those things are cheap and technologically viable. And frankly, to fight climate change, we ought to do a whole lot more of it and basically ban tilling soil. There's ways to farm without tilling, and it's only a hair more expensive. So there's not a problem out there that we can't solve. Now, climate change will be the one that takes the longest because we've already done so much damage. And forever, as far as we're concerned, the rest of this century, there will be money to be made on that. Alternative energy, real estate redevelopment, all sorts of things. So one company that benefits from inflation coming down, Unilever, which has had problems for the last 3 or 4 years, but this is, I think, the best consumer staple stock out there. And they're going to probably start spinning things off. They're breaking into 5 units. I talked about it in the article. And this stock probably has a significant leg up. And by the way, pays a fat dividend and gives you international diversification. Options market isn't all that robust. But if you are the person who's looking for a steady eddy with upside and income, has a whole bunch of things that are never going to go out of style, this is the company right now. And the mirror image is Procter Gamble. And in fact, an activist investor who is in on Procter Gamble is in on this one, Peltz. So they're going to fix the organization. They're getting rid of 15% of their management, their middle management, because it become a very bureaucratic organization. And that's going to unlock a lot of value. And by the way, one of the units has cannabis. So here's what I talk about when I talk about, are you going to bother to take individual stock risk? When do you take single stock risk? When the risk is average, right? Because almost everything has market risk, but when the upside is higher. And how do you get higher upside? It's when the market misses something, when the market doesn't value something. And if you can find a company with 2 or 3 things that the market doesn't value, you are in great shape. Somebody asks, is there a sell price on Unilever? Yes, but it's not anywhere close to where it is now. When this stock gets overbought on the monthly chart and its PE to free cash flow ratio, its price to free cash flow ratio gets towards the high end of the 5-year range, which I've shown you those before. I use a stock rover to show those. That's when you can trim it or sell covered calls. My guess is that price is closer to 100, but we'll see. We'll see what happens when they spin off a unit or 2. Then you end up owning the beverage unit. They're calling it the nutrition unit, I think is what they're going to call it. I think that could get spun off into its own company. And if they do spin that off, it's basically Coke Plus. And then you go, probably want to own that one. All right, here's something else benefiting from high oil prices and gas prices. New Fortress Energy. Now, this is a highly leveraged company. So they seem to be past the risk of that leverage. They've gotten down to a point, look here, where there's not really any sellers. So there's strong hands developing in here, right? This is where we start to pay attention. Then we have to see where the strong hands appear. It's almost always by the bottom line. Yeah, you get down here sometimes, but not often. Take the 200 companies recovering. They don't get down here very often. They get in here pretty often. And usually I have this box drawn 6 months to a year ahead of time. Now, I remember last year, charts that looked like this, right? If you just, charts that were up there last year, and I drew these lines, people are like, how is something up here going to get down here? What was one of the questions I asked? Well, it was just over there. Amount of time that it went up is roughly the amount of time it goes down. There is symmetry in that. Sometimes you get the elevator drops, then you have to ask yourself a question. Is it just going to make that sharp V back up? And a lot of times the answer is yes. You see a lot of stocks that go straight down, jitterbug, and then bam, 3 steps up, 5 steps up. New Fortress Energy has a technology, I covered it in the article, for loading liquefied natural gas without having to take it to shore first, from the wellhead in the ocean to a transport vehicle, to a barge, shipping container, you know what those ships are called right now, freighter. So when you take a look at New Fortress Energy, all you gotta do is see the one technology. They have basically an on the water liquefied natural gas plant, and they float it to wherever they need it. Now, I don't think Ukraine, now that I've been watching this a few weeks, I don't think Ukraine is going to get invaded. Why? Because if they do that, Nord Stream, or whatever that pipeline is over there, Nord Stream, is that what it's called? Is not going to get built or get utilized. The Germans are fighting it a little bit. And Russia, you know, they cut some deals with China, so maybe they're going to assert themselves. We'll see. Almost anything that Russia does is going to help the price of energy because that's what they need. That's going to be good for these guys. By the way, what's the other catalyst? Not just a technology almost nobody else has. What's the other catalyst? Backdoor plan, hydrogen. And they're being very open about it. So if you're okay with a company that's got some leverage, the good thing about leverage is that it causes sharp rallies. Shooter threw out there that the wave 3 measures to $58 on Unilever. So if you're a shorter term trader, it'll go up here and then you can trade it. But to me, the upside of Unilever is closer to $100. You just have to decide how you want to trade the ups and downs between here and 100. That's based on you. If you're a swing trader, you're going to make a number of trades. If you're not a swing trader, you're happy just holding it to 100-ish and collecting your dividend, that's fine too. You do you. Told you this week to sell the puts on Atlantica. I gave you all the reasons why. It popped. So you could have sold those puts and taken a profit pretty quick, but you're going to get another wave down. You get a correction here. You know, might not start until it's up here and then come back down. But Atlantica around 30, a little above, a little below. I don't remember what Shooter said. I believe the other wave price is in here somewhere. You can trade it. Again, you do you. But if interest rates don't go up as much as other people think, then all of a sudden the utilities are pretty attractive again, right? These guys have sustainable growth in the high single digits. They're increasing their dividend by middle to high single digits every year. And I believe that there's going to be even more government subsidies in the future to develop clean energy. You just wait. There's going to be a hurricane. I don't know where. I don't know if it's this year, next year, or the year after, but it's coming. There's going to be a monster hurricane that smashes New Orleans or smashes Miami or smashes the East Coast. It's going to hit people who don't like to be hit, that have some power. The oil industry, South Miami, East Coast folks. Or there's going to be a typhoon that does something to California or Hawaii. There is a weather event coming that is going to be so off the charts that what we've seen in the last 20 years is like the pebble that got thrown in. There's going to be a boulder dropped in on the weather front that's going to wake everybody up. You go, oh my God, we're actually in trouble. 2/3 of the population already believes it, but they're not motivated to do much about it. When their homes are destroyed, when their livelihood is taken away, when they're sitting on top of a roof waiting for somebody to bail them out, then they get motivated. And it's coming. Warren Buffett is saying it too. He won't even insure some certain things anymore. Atlantica benefits from that and the whole utility thing. That's how I look at companies. I don't say, oh, that one looks pretty good. They got a nice business. Yeah, they better have that. But then I want other things on top. And this is a hedge on that weather event that makes people go, climate change is not only real, but oh my God, it's so dangerous. I want to do something about it. I'm going to vote for that guy. It's coming. I don't know when, but pretty soon, based on all the NOAA charts that I look at. So going back to the financial system, I told you to sell puts on PayPal and Square. The PayPal puts, you would have gotten your price because it went down just a little bit further. There you go. Good enough. All right. So I'm using a daily chart. I just want to show the current price. Take away the, see how it led QQQ? And now it's right where QQQ is from my base of the 2016 region, which is when it IPO'd anyway. Do you think PayPal's going to lead QQQ again? I do. They're at the forefront of the financial revolution. Might not be the leader anymore, but they're close enough. Take away this just to show the price. There you go. It's 118. You should be selling the cash secured puts right now. Because if it gets put to you down here, good, right? This isn't just about income. It's about when do you want a stock put to you. And PayPal, I believe, has earnings coming up. What is it, next week? I'll write about that this weekend. Right now is a good time to sell that. This is going to lead again. Look how fast it came down. Could be back up here by 2024. It's a triple. Square, same thing. Came way down. It's popping today. Oh, actually, it came back down today. Oh, no, this is a monthly chart. Let's look at the daily. All right. Again, Shooter has the super short-term charts on this if you need them. If you're at margin of safety, you don't really need them. You're not trading. You're just looking for good position. So here it popped up a little bit on earnings, but I said right the March 18th $100 puts for $5, you would have gotten it. Now the stock is stabilizing, and it might have a little jitterbug down yet. But again, if it gets put to you at 100, so what? You had $5 in premium, that almost gets you to the bottom fisher price. And Square is one of the companies that owns a bunch of Bitcoin. If you watched the interview from a few weeks ago, you know the Bitcoin's going to at least 100,000 soon enough next year, probably. Maybe this year, but next year for sure. And I've mapped it out. It is almost a certainty that Bitcoin goes to 250,000 in the next 3, 4, 5 years. It is digital gold. Now, at some point, it'll stop being a super growth asset and become much more stable. I don't know if that happens at 5 million or at 250,000. It depends on how many billionaires and giant corporations put Bitcoin on their balance sheet as a store of wealth. Family offices who are guarding money for multi-generational purposes and account for a significant hunk of wealth in America, they're going to put Bitcoin on their balance sheet. If you read institutional investors, they're telling you they're doing it. They're buying the dips on Bitcoin because for them, because it's a sound currency essentially. And when I say sound currency, it's not that, again, you're not going to use it to buy your pizza. You've heard me say that before. It's there so it doesn't get inflated away. Now, part of the thesis that's wrong about Bitcoin is that it's there to fight inflation in the dollar. That part's wrong. The dollar is going to get stronger over time. But all the other global currencies are going to get weak. The yen's going to finally come down. The yuan's going to keep getting weaker. The euro, they can't get out of their own way. They're just never, ever going to be what they should be. I've become more and more convinced of that over 30 years because I was talking about this in college, actually getting talked to about this in college, but learning how to understand it 30 years ago. And I remember some of the things that professors told me, in particular, Chinese professors who couldn't go back to China, European professors and Israeli professors who decided to stay here. They all came to Milwaukee because we have great restaurants and a lot of beer, and they are all big fans of cheese and sausage, but they were all skeptical of where they came from, Europe and China. And it turns out they were all right. Why would they suddenly be wrong? They're not going to be. So the dollar is going to get stronger, and the Bitcoin against other currencies is going to get stronger. So you're going to get a lot of foreign money coming into Bitcoin. That's why you should get yours in now. Find places to scale into Bitcoin because foreign demand is going to go up. Square owns a bunch of Bitcoin. Marathon Blockchain owns a bunch. Companies that own blockchain from cheap prices are going to do pretty well. They may not be the tech juggernauts, but Square is one of those interesting companies where you can value their business, but also value their assets because they have IP and they have Bitcoin. I would think that they're buying Ethereum, but I haven't seen that yet. But it would be smart. And I think Ethereum is going to get that wave from anyone who wants to be in the whole NFT space, become an exchange of the future. And that's why you need to own PayPal and Square, in addition to some Bitcoin and Ethereum, because the financial industry is going to change that much. Commerce as we know it is going to digitize. Lawyers who spend $400 an hour going through paperwork, they're investing in this stuff because they see the writing on the wall. How do I know that? I talk to lawyers, talk to contract lawyers, ask them how much time is going to be saved when this stuff goes digital. Talk to people at titling companies. Talk to people who handle global supply chain logistics. Talk to people who trade energy. That's something that Shooter is talking about. So PayPal and Square, don't try to pick one, just get them both. And they're both giving you an opportunity right now. Nibble, sell some puts, spread them out slowly over a number of months. Covered a few more puts in here. Zoom, PayPal, pretty much covered those. So I'll finish with the Metis. I promise to have that video up on Monday morning. Might even have it up Sunday night. BlackRock bought 9% of the company. They're the number one shareholder now. Stock popped on that. Came down a little bit yesterday or today. A little bit today. They are well on their way to $5 billion in revenue. Think that through and then go look at their market cap. They just cut another deal, this time with Japan Airlines. One of the things that Eric McAfee says in the interview with me is that they're going to dominate diesel fuel for the San Francisco airport and maybe LA eventually too, because they're right in between. And sure enough, a few weeks later, they get the Japan contract. That was right after Delta, and UAL. Was it UAL or American? I don't remember if it was United or American. I think it was American. This is another company that benefits from high oil prices and the shift to clean energy. And some guy is telling me in the chat room, and I understand what he's trying to say. He's wrong. He's a little bit forward with what he's saying. But here's why you invest in companies like this. Notice anything interesting about the right-hand side of that chart? That's a projection for the next 8 quarters based on the current contracts. They just got them all last, 4 or 5 months? And they did the deal to build the plant that's going to provide all the fuel to generate this revenue. What do you think is going to happen when people suddenly see a company like this trading at $10 a share, earning $2 and $3 and $4 and $5 a share? Where does the stock price go? By 2025, 26, this will be a $50 stock. It might, if anything goes right in India, where they also are a leading diesel player, be a $100 stock. So again, this is a company with multiple catalysts. What we know is what's happening in California. So that's going to drive it to $50. What we don't know is whether or not things will work out in India. They might not. But if they do, it's actually a bigger market, in which case this could be a darling. So if oil stays firm and only drifts back down to the 60s, never crashes, and I actually think that that's the most likely scenario. I told Forex Analytics, I think oil will be range bound a really long time. We're getting to the upper end of the range because OPEC's trying to squeeze every dollar they can out of that stuff they have in the ground. So much so, Chevron and Exxon are increasing production, and so are the other Permian players. So like I told you last week, there'll be about 1.2 or 1.3 million barrels a day on top of what we're already doing coming out of the ground this time next year. And Guyana is coming online rapidly with Hess and Exxon. I hope you can tell that I read once in a while. Iran is getting closer to a deal with the United States. That's going to get another 1 million or 2 million barrels a day on the market. I think 2 million. Russia is giving China all they want. You're going to see the price of oil come down in a big way in 2023. I don't know if it'll be the first half or second half of the year, but when it happens, you better be long gone from traditional oil stocks, because these guys, New Fortress and these guys, they're taking a bite out of them too. One of the nice things about Metis is that a lot of it's based on tax incentives. Those are guaranteed for a while. And the price of what they're selling is contractual, not spot. All right, I will take just a couple of questions and we'll call it a day because this one's going to take a long time to edit. Should we start scaling into, I'm thinking I was talking about Intel when you asked, Sandy? Yeah, I shouldn't have to sell you on Intel. It's such an obvious smack in the face that it's a must-own stock for dividend investors. It's a must-own stock. I think that you buy just a tiny, like 0.25% or 0.5% position, so it's in there. Then you figure out when to sell puts. And if it gets into the 30s, then you just back up the truck and you make it a 3, 4, 6% holding, and maybe you have a double holding. Qualcomm is all right. Historically very volatile, so you buy the crashes. They have IP that's going to be used forever. Nord Stream was the name of the pipeline I was trying to think of. What impact, if any, will El Salvador making Bitcoin legal tender? Look, he's actually right to buy Bitcoin for the El Salvador treasury. Doesn't make sense for them to trade it a lot and use it to buy their pizza or whatever it is they're eating in El Salvador. Everybody eats pizza, right? So I don't think it matters to that extent that it's like going to change the financial systems, because you still need to be part of the SWIFT system, and that's not going to be Bitcoin based. That's going to be digital dollar based. So it's just a good investment for El Salvador. It doesn't really move the needle by themselves, but it goes to that trend that I told you. Foreign demand for Bitcoin is going to go up. So get in there first. El Salvador is a harbinger of what I just said a few minutes ago. So I bought a little bit of Bitcoin when it hit 39 and change because Shooter told me to. He was right. And I still think that there will be a panic sell on Bitcoin when the regulation comes. I think the waves show that that's probably going to manifest as well. A couple of the biggest traders in Bitcoin are saying a price in the 20s, which is along what I've said. I think it overshoots into the 20s. But when you take a look at what it costs to mine Bitcoin, you realize there's kind of a floor under it once you get into the 20s. Because what it does is it kills some of the mining, but not really. They're just, these guys know better. And you just get your value buyers. You get your family offices and they're buying. That's what happens. So just like anything else that's cyclical, and everything is cyclical to an extent, you buy the troughs. With Bitcoin and Ethereum, I think you should have a dollar cost averaging program. Put in a small amount every month relative to your bank savings. So if you got 100,000 in the bank, dollar cost average 10,000 of that into Bitcoin and Ethereum through the end of next year. And then take another 10,000 maybe from your investment portfolio, and I've been hesitant to say that, you know that, and dedicate that towards some other form of crypto. Probably the two safest ones are Bitcoin and Ethereum, but I tell you what, Shooter has found some ones that are going to survive, and so have I. And they're more volatile. And that's why you need to have crypto trade shots, which I'll open up to the public temporarily, and I'll run an article on margin of safety investing, letting you know that it's open. In fact, I'm doing it right now. There you go. So crypto trade shots is only $199 right now, and eventually it's going to require you to have a membership. So here, if you have the free special reports library, you can get it too. There you go. And the introductory price is $199 a year. But honestly, I've taken a look at the other similar services, and most of those are priced at, you know, somewhere between $5,000 and $1,000 a year. So we'll head up to $399 for sure. I'm not really sure if we'll go higher than that. Shooter and I both like to keep our price at the low end of the range, mainly because we know that we're as good as everyone else, and we steal all their good stuff anyway. Why do we need to upcharge you? I mean, I understand that there's certain magical formula traders out there who want to charge every dime and make the trading not worth it. But yeah, the reality is neither one of us are poor. We just want to help as many people as possible. You know, I grew up on the wrong side of the tracks. We worked our way out of a bad situation over a couple generations. And now all of a sudden, you know, I'm talking about starting a real estate company with NFTs, right? So I gotta thank my dad and my grandfather and his grandfather and his dad, all the way down the list, people I haven't met. Shooter says if Bitcoin gets to 30,000, back up the truck. And I'd agree, that's about right. It may go a few thousand lower, but yeah, at the time we'll know, right? As we're measuring the momentum in real time, we'll know what Bitcoin's gonna get to. Poopa sauce. Oh, IMF pushing back on El Salvador. What is Poopa sauce? Is that the name of one of the IMF people? So that goes to the point that I made that countries still want to be part of the SWIFT system, so they're still going to have digital dollars. 26 days of deliberation for the SEC votes. The regulations on Bitcoin are not going to be exactly what the crypto people want. Oh yeah, Lumen. Hey folks, if you're a dividend investor, remember I said if Lumen Technologies gets back to around 10 or 11, that's when you add it. Look at that. So let's see, RSI, that's pretty oversold. And I can tell you this, the fact that people got weird over their earnings, I'm actually pretty surprised about. I'm not really sure how this happened. There must have been some short interest or something, but Lumen's going to be fine. They might cut the dividend in half, but that'll be fine for them. So I think this probably reflects the possibility of a dividend cut. But the people who are in at this point are relatively strong hands. So I'll put something out this weekend, but I actually sold puts on it. I don't know, I'm getting my time frames. I don't know if it was Wednesday or Thursday, but I did sell some $10 puts on it. Kathy, whenever I talk to you, that's when I did it. Kind Kath over on the margin of safety bulletin board asked about it. And she actually alerted me. I didn't know what was happening, and I saw it. I was like, oh, look at that, bottom of the buy zone. Now, could it get down in here for a hot minute? Sure. Could get definitely down into the 8s. There's no doubt about it. However, there's not a lot of premium in this, which means that it's not really all that risky. If there was a huge premium, that's when you should go, what is the speculation here? But there's not a lot of premium here. So you take your 30, 40, 50 cents on a March 10 or an April 10. I would say the March, let it get put to you. This is especially a good trade, actually, if you already own Lumen Technologies. If you already own it, you sell a put. And if you own more, you own more. So they are still going to spin off a division, and that's going to allow them to buy back shares. And that's one of the things that has become pretty important to me is, will they buy back shares? That is, you know, I want the cannibals. As Charlie Munger says, invest in the cannibals that eat their shares. Fewer shares mean higher prices, right? Supply and demand. All right. I'm not sure if I'm babysitting the Hulk today or not. He's got some diaper explosions lately. So we'll see if I'm on diaper explosion duty. Otherwise, I will fix my attic and see what I can do about getting better insulation. All right, everybody, have a good day. I will edit this by tomorrow night. It'll be up on Sunday morning.